Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Market Analyst at ADM Investor Services International Limited. Here's our daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bearish dark cloud cover pattern and bearish double pattern yesterday. There was also a possible pipe top as well. The close back below the flattish trend line, currently at 99.72 of the recently highlighted possible ascending triangle, puts that whole pattern under threat and moves the focus now away from the idea of a recent October-based ascending triangle pattern. Admittedly, as I've said repeatedly, resting in the wrong place, and instead now moves it towards the action in October possibly being a bull channel. It hasn't moved away completely, but it has moved it away. The market still closed up over the broken upper time, currently at 98.50 of the recent June to August bearish shift pitchfork, and its partner, the declining short-medium moving average, currently at 99.04, as well as the 61.8% absolute Fibonacci line at 99.15 and the December 2002 low at 98.55. The former of which, to be honest, hasn't done that much. The top side was capped, unsurprisingly, by the now slowly declining medium moving average, currently up to 10078. The action in the coming days will decide which pattern of the two mentioned will be the one dominant, or it may be something else completely. So far today, a move back up over the flattish trend line, but then a move back down towards the 61.8% Fibonacci line and nearby short medium moving average. This continues to move the focus away from the ascending triangle idea and towards that bull channel idea. Cable, aka sterling against the US dollar. A bearish harami yesterday, though it was the second close over the recently mentioned possible new pattern, the October-based ascending triangle, currently 111.15 to 115.03. The move lower here was not as drastic as in euro dollar, and it has preserved this pattern, even if it is, as I've said repeatedly, the pattern was in the wrong place. It also does not discount the idea I've also floated that the pattern may instead be a possible October-based bull channel. Prices once again shied away from testing the now shallowly falling medium moving average, currently 117.28. Meanwhile below, we still have, under the flat upper trend line, the combination of the October 2016 flash crash low at 114.5 and a declining short medium moving average. That's currently at 114.21, as well as the March 2020 low at 114.02. Now, I'd like to repeat this once again, some of my thoughts on this ascending triangle. For starters, as I've said so often, it is in the wrong place. It should appear at the end of a move higher, not at the lows. Secondly, and this is a greater concern, is that the action over October may stall and pull back down, and the supposed ascending triangle converts into a bull channel or ascending wedge pattern. On this last point, it is too early to say as yet, but it may be there, so just watch out. So far today, a further small decline, but enough of one to challenge the flat trend line of the ascending triangle and maybe make the past 2 days into a 2-day tweezer top pattern. Today's action may end up being very crucial. Euro sterling. A third bearish black crow yesterday and a continued follow-on low to the recent immediate countering bearish dark cloud cover pattern type. Yesterday saw a full break and close below the combined base support of the rising short medium moving average, currently at 86.73, and the April 2020 low at 86.69, as well as, and perhaps more importantly, the lower time, currently 86.31 of the oft-mentioned April to August bullish Andrews pitchfork. This is the first close below either the lower time or the upper times of this bullish pitchfork since its construction. The market stopped short of the next key support below, that's the flatlining medium moving average, currently at 85.95. It will be interesting to see if the market will repair this breach or exploit it. I would just point out one other item. This is the sort of delayed response you might expect to a weekly key reversal down such as this market had 2 weeks ago. Now so far today, a lower open but still within yesterday's range. The seeming immediate rejection of the medium moving average below, the market pulling up over the lower time, but not as far as the April 2020 low. It's looking off, well, maybe a little bit like an inverted hammer pattern, possibly. US dollar against the Indian rupee. An immediate countering bullish harami and bullish opening white Mariposa. The pullback up reached as far as the lower trend line, currently 82.55, of the recent September to date ascending expanding wedge pattern, but failed to close over it. Looking below, well, we still have some light support from late September at 81.90, but better support is on the congestion from late September between 81.45 to 81.51. This was nevertheless a second consecutive close below the ascending expanding wedge pattern, and again sufficient to start looking at possible targets below. Thus, an initial primary target, potential target would be in the 80.70 zone, whilst a harder secondary target would be in the 80.28 zone. It is still early for this pattern, but it's worth looking at. So far today, a small follow-on move higher towards the lower trend line, but again not breaching it as yet. The US dollar against the Brazilian real. A somewhat extraordinary move yesterday. A bearish harami that was also an outside day that really neither added nor took away anything from the market. This time the market pierced the previous 2 days base of the 50% Fibonacci line of the May 2020 to April 22 move at 527.37, which late last week actually had been a cap on prices, and instead used the rising medium moving average, currently 523.95, as a base of action. Meanwhile above, the cap was once again the lesser Fibonacci line at 538.13. Looking further below, we had, well, what I'd called recently the really heavy supports, heavy forces supporting this market of the rising medium moving average and the lower time, currently 521.70, of the late May to late August bullish shift pitchfork. They had been breached over last weekend, but as you can see, the recent action has been a good patch job on this breach. This bullish pitchfork is the current key driver here right now. Looking further above, we have what might be a stronger resistance in the 543.81 area. US dollar against the Mexican peso. Well, it's not like I didn't warn you these things might happen. Okay, so yesterday was a combined counter to the counter key reversal down, if only just, and also a bearish engulfing pattern. This goes against the previous session's combined immediate countering key reversal up and bullish harami, and supports the earlier bearish engulfing pattern, even earlier inverted hammer pattern. Yesterday was also a new low for October, if only just. The market has continued to travel down the outside of the broken upper time, currently at 1980.77. It was a March to July bearish Andrews pitchfork and is now hitting the middle time, currently 1981.28, with a bearish shift pitchfork for the same move. This segues nicely into something I have been warning about now for a couple of weeks, and I quote, "Yet I suspect it may still be significant." You see, the reason I've taken pains to highlight these two tines these last few weeks is that about a week's time, it is actually today, but I carry on. In about a week's time they will cross over, and for those who know me well, that is when I say look out. Look out for one of more of the following: a change in trend, a reinforcement of an existing trend, and or volatility. These usually lag the crossover by a session or two, but it's worth watching out for what happens on or around the 28th of October. You can see the crossover within the red circle on my daily chart. End of quote. So, we are in crossover day, and we have already seen volatility, which is exactly what I would expect. There may be more, so watch out. In the bigger picture, the market has continued base building since mid-August, between roughly 1990 and 2020, with occasional, such as yesterday, the day before, and even today, forays outside. This is still the picture, with no significant feature yet developed in either direction, or at least that's what I'd normally say. However, I had started to look at the action since August as possibly having elements of a rounded bottom, which includes that rising bump from 3 weeks ago, even if altogether it's not such a great looking pattern. I have to say, yesterday's action does not help matters in this regard at all. So far today, a reactionary move back up from the time crossover, but not by much, looking like a possible bullish harami right now. I am so wary of this crossover and what may happen. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZD Tofpik and ADM Investor Services International Limited. And here comes the final bit.